So read these points, take 30 seconds to read them, and then I will explain. Okay, so how do we interpret beta? So beta values are greater than, or they lie between -1 to 1 actually. Okay, not -1 to 1. We greater than 1 or less than 1. That is how you can try to interpret them. So beta of a stock, if it is 1, we will say that if the overall market, that is, let's say Nifty, has increased by 10%, so the sensitivity of my stock is equal to the sensitivity is equal to the changes which are happening in the overall market. So if the Nifty has increased by 10%, my stock will also increase the return, will give me increased returns by 10%. Okay, if the market will fall down by 10%, my stock will give me reduced returns by 10% itself. So equal performance with regard to the overall market itself. Okay, so that is the interpretation. Now, if the beta is greater than 1, let's say I say that the beta of my stock is 1.5, then in that case I will say plus 1.5. If it is plus 1.5, then I will say that if the market increased by 10%, gave 10% more returns, okay, so my stock will also give increased returns, but this time my stock will give 15% return rather than giving 10% return, because the beta is 1.5. So you can consider beta as a multiplier. Okay, so 10% increase in the returns of the market, 10% multiplied by 1.5, that is 15% increase in the performance of my stock. Similarly, vice versa, if the beta is less than 1, let's say it is 0.9, then in that case, plus 0.9, then in that case, we will say that if the market will move up by 10%, my stock will move only by 9%. All right, 10% multiplied by 0.9, it is going to give me 9%. So my stock will increase by 9% only. So these stocks which have a beta of less than 1 are called defensive stocks. Those stocks which have a beta of higher than 1 are called aggressive stocks, and which have beta equal to 1, neutral. Okay, so that is one thing. Now, how will I get to know about the direction also? So the negative sign and the plus sign will tell me the direction of the movement of that particular stock. So if I am saying that my beta, the beta of my stock is minus 1.5, then I will say my stock is aggressive because it is having a beta of greater than 1. And on the other side, since it is having a negative sign, so if the market is going to move up by 10%, my stock is going to fall down by 15%. And if the market is going to fall by 10%, my stock is going to increase by 15%. Okay. So that is how we will interpret beta, and how exactly beta is going to tell us the overall performance of a stock, right?